In this video, we're going to quickly review the components of the Ichimoku cloud. We're then going to get into the concept of mother chart, trading chart, and we're also going to cover the primary trading signal of the Ichimoku cloud system. And it sounds like a lot, but I think we can get through it fairly quickly and in a coherent manner. All right, we have on the screen the Ichimoku cloud and all of its major components. And just to review them quickly, they are the Kumo, or the cloud. And the cloud is either green or brown. And that determines whether it's in a bullish or bearish condition. And one unique feature of the cloud is that it extends 26 periods to the right or toward the future beyond price, the current price bar. Now, that's not a prediction of future prices. It's the best estimate based on the past 52 periods of where price is most likely to meet support or resistance going forward. Now, the Ichimoku cloud is a swing trading range chart, and that's really all it is. And once you understand the pieces and the cloud itself, you can see how that fits. The Tenkan-sen is the midpoint of a 9-bar high-low range. In other words, if you count back 9 bars, including the current bar, this point, the last point on the Tenkan-sen, will be exactly the midpoint between the highest high and the lowest low. The Kijun-sen is the midpoint of a 26-bar range. And the Chiku span, or the lagging line, is the close of the current bar offset backwards in time 26 bars. And the whole purpose of the Tenkan-sen, the Kijun-sen, the Chiku span, or even the cloud itself, is to show you where price is in relation to the trading ranges of the past 52 days and primarily the past 26 days, which makes the Kijun-sen one of the more important elements of the cloud charts. And the whole purpose of the Ichimoku cloud chart is to be able to observe at a glance, that's actually what the name means, equilibrium at a glance, when the equilibrium between buyers and sellers has been overcome by one side or another, and price is able to move strongly in one direction. So I hope that simple explanation was adequate to explain what the purpose of the Ichimoku cloud chart is. It's a range swing trading chart. Now, you can determine bullish or bearishness by the state of the different elements in the chart. And on this gold chart, it's in a bullish state. And we'll go to the rules. Or in this, this is a V chart, Visa, and it's in a bullish state. And there are only really 4 things that you have to look at to determine whether this range chart is trending or stuck in the range. And the first thing you want to look at is price, which has to be above the cloud and above the Kijun, which remember is the midpoint of the 26-bar range. You also want the Tenkan above the Kijun, the 9-period range above the 26-period range. And if you follow the blue line back, well, you can't see it here, but it would have crossed over here. So we know that when the Tenkan crosses above the Kijun, that the range within the range is moving up. You want the Chiku span, that's the lagging line, you want that to be above price, because you'll know that the current bar is trading outside of the 26 bar range. So you're in clear air, and that's going to make it easier for price to move higher. Now the bearish condition rules are the opposite. You want price below the cloud and below the Kijin. You want the Tenkin below the Kijin. You want the Chiku span below price, which you can see here, and you want a dark future. I don't think I mentioned the future on the bullish chart, but you want a bright future. That's the other requirement. And on a bullish chart, that means that if you look to the far right, the cloud will be green, and for a bearish condition, if you look to the far right, the cloud will be brown, and that means it has a dark future. So these are all the conditions for a bearish chart, a bearish condition. Now that was a lot in a small amount of time, but if you review just those elements, you'll have the essence of the Ichimoku cloud chart. And even though there's a lot of colors, a lot of lines, that's really it. And I don't think it's really too much to grab in a short amount of time. Now, there's a couple things about the Ichimoku cloud that apply to other charts as well, but I think it's more distinctive in the Ichimoku cloud chart, and that's how much different time frame charts or how different time frame charts can look and tell you an entirely different story. And to resolve that, we want to get into the concept of mother chart and trading chart. Now, I think that intuitively we ask ourselves the question, well, I trade off the daily chart, but what time frame do I want to enter on? And I think that's a reasonable question, but I think it's the wrong question. I think that should be split into two questions. One is, what is the mother chart? And two, what is the trading chart? Because they're really distinctive things. And one way to approach that issue or that concept is to determine what time frame am I trading. And the expected move on a, say, valid price swing or a new swing is 10 to 20 bars, which means that if you're trading a 5-minute chart, then you can expect a swing of maybe 50 to 100 minutes before it stalls or pulls back. Which means that if you trade off 5-minute charts, that's essentially a day trade. 15-minute charts, 150 to 300 minutes. There's 390 minutes in the trading day, so that is also a day trade. So as far as swing trading is concerned, holding overnight with an expectation of a continuation move beyond that, the 65 minutes chart is a good candidate, because that'll give you a swing trade of 1.5 to 3 days. And if you trade it only off the daily, then you could look to 10 to 20 days for your trade. So this gives you an idea of what to expect from the different time frames. And this goes back to questioning the question, what time frame do I enter on? If you're trading on a daily chart and you enter on the 5-minute bars, well, it may be a good entry, but it may not be a good entry 100 minutes later or 20 bars later. It may turn into something quite different. So oftentimes you find yourself shooting yourself in the foot because you're trading off a daily chart but looking for signals on something substantially less in time with a much less expectation of execution. So this is a chart of the SPY daily, and this was taken today. This is Thursday, August 31st. And if we review the 5 bullish rules, we can see that price is above the cloud. That's bullish. But other than this bar closing today above the Kijin, we can see that price has been below the Kijin, although it was slightly above the Tenkin. And we can see that the lagging line is under price, and if it were a really bullish chart, it would be above price. And we can also see that it has a bright future. So overall, we'd rank the chart as bullish, but only moderately so. But if we move down to the 65-minute chart, we get an entirely different picture. And this chart is also from the last bar from today. And we can see that we had a Kumo breakout several bars ago that is still in effect. So had we used the daily chart as our mother chart to determine only the size of our position and our expectation of the possible results, and then relied on the 65-minute chart as our trading chart and took our signals therefore from the 65-minute chart, we would have perhaps a different result. In any event, conceptually, our understanding of what time frame we're trading would be much clearer. This 65-minute chart has progressed about 18 bars so far. So early in the trading session on Friday, we'd be looking for some potential weakness and maybe be making some decisions about holding or taking some profit. So in this instance, we looked at the SPY daily, and based on our bullish or bearish rules for the cloud, we made a determination as to whether the chart was overall bullish or bearish. Now, it wasn't 5 points bullish like we saw in the Visa chart, but it is bullish, so we're looking for long trades. We prefer long trades, and we'll take them on our trading chart, which is the 65 minutes. Now, you don't have to use a daily Kumo cloud chart as your mother chart, and in fact I use the TO or Trading 5's oscillator chart as my mother chart for a couple reasons. One is that I can very quickly and very easily grab precise and definitive price levels. One is by watching for changes in trend on the stochastic RSI, and then using the TO or the trading oscillator to set price levels that above which, say if it's a bullish trade, would be a breakout consistent with momentum. And the other is by using fractal levels, and a breakout above a fractal level is a bullish condition. Now, a fractal is simply a 5-day high or low. In this case, this is a high, a fractal high at 245.61, and that means that this high is higher than the 2 bars immediately preceding it and higher than the 2 bars immediately following it. That makes this bar a fractal. Now, a fractal low is a low that's lower than the 2 bars preceding it and lower than the 2 bars following it. So this bar that the cursor's on here will become a fractal low, or is a fractal low. So I like using the daily Trading 5's oscillator chart, the TO chart, as my mother chart because I can get the precise price conditions, and I can also look at the situation with the stochastic RSI for momentum and the trading fives oscillator, whether it's above the zero line or below the zero line, to gauge the bullish or bearishness of that chart. Okay, another chart we want to look at from today's trading is IBM, and this is an Ichimoku cloud chart of IBM daily. And if we look at our 5 points, price is below the cloud. The cloud has a dark future. Price is at or below the Kijin, but it's also above the Tenkan, so it's kind of in the no man's land between the 26 period range and the 9-day range. But the Chiku span, the lagging line, is below price and below the cloud. So this is a bearish chart, and if you wanted to trade a long position from here, then the consideration would be, if this is your mother chart, that you're going to reduce the size of your positions. For example, if you traded 10 lots, then maybe you'd want to trade 3 or 4 or 5, depending on what kind of potential you saw in the trade. But you wouldn't be trading your full 10 on the long side, because it's a counter trend trade from the mother chart. And what we'll do next is we'll look at the IBM 65-minute chart. And we can see that a couple days ago we did have a cloud breakout with a bright future. It would have to count back and forth to really see where all these different lines were at the trade, but it appears that the Chiku span would have been just breaking out above price. We would have had a bright future at the time, and price would have been above the cloud and the Tenkan and the Kijin. So it would have been a valid trade, and we would have gotten a gain out of it before it pulled back and went flat. So again, this is another instance of where you get an entirely different look or different result or a different trading signal on the daily and the 65-minute chart. So in this case, had you used IBM for the mother chart, or the daily IBM for the mother chart, you would have reduced the size of your position on this trade. And again, I would prefer to use the daily TO as the mother chart. And in this instance, using a signal or a price level signal from a combination of the oscillator and the stochastics RSI, we would have had a tradable entry at about 141.45. It would have been a counter trend trade because the oscillator is below the zero line, and we were below the momentum ribbon. So maybe never would have taken that trade at all, and if so, it would have been with a smaller position. But again, I prefer to use the TO daily charts as my mother chart, because I can get the specific price levels and then translate them over to the Ichimoku cloud charts. For example, this green line was one that well, it appears automatically when you open the Ichimoku cloud chart, but I established it in my mother chart and appeared here. And this is a price level which was bullish above and not bullish below. IBM on the 65-minute is currently below the breakout price. So whether this is an attractive long trade or not to you would be a matter of choice. To me, it would not be. All right, went through a lot of material very quickly. I want to keep these things under 20 minutes if at all possible. But we reviewed the concept of the Ichimoku cloud, the fact that it's a swing trading chart, a swing trading range chart and what kind of time limits or time extension or time exposure you can expect on a trade using the different time frames, and that it's probably better to ask the question, what time frame is my mother chart and what time frame is my trading chart? I think is a better question, or a better set of questions, than what time frame do I enter on signals on the daily chart. So all in all, I hope you found it useful. I think there's a lot to explore with the Ichimoku cloud. We'll start doing some live charts and going over some examples of live trades to see how they're working out and what things you might want to be looking for.